Hello, welcome to Macro Point of View Commodity News on 9th November 2023, and today's episode will start with Brazil Petrobras, who used their refinery to create a biorefined product made 100% from soybean oil. According to the company, it's brand new source of and way to create biofuel, and it probably will be a future for the refinery industry. The next test run is planned for the June 2024, and company doesn't say when they're gonna start commercial use of this kind of based, but what they looking for is to create a biological, natural resources covering areas of LPG, of shale oil, of some kind of BTX products, PVC, and all kind of that. And it probably will be changing also the point of view of the soybean market, due to the fact that it will disrupt the balance between the supply and demand, especially that Brazil is one of the two largest soybean suppliers in the world and the main soybean supplier to China. So in the next years there is probably a way that some kind of part of soybean export, oil, soybean oil and meal will be disrupted by the fuel industry in the ways of course, saving our planet and defending from climate changes. We'll take a look on the market, what's going on, and we'll keep an eye on the news like that, but let's take a look what will and might happen in the next couple of days, couple of sessions on the market. Let's start with Brent oil, when we can see the market stopped after reaching $80 and crossing $80 level after huge drop from $85 last week, $90 at the end of the October and end of the September high of $97. So we are after almost 20% drop, and it changes everything. First of all, we are doing this drop, this move out from the oil because escalation on the Middle East, the Israel-Hamas conflict, is now, well, less possible. It's not completely out of the picture, but it's like the world is getting used to it. There is another war included one of the sides with nuclear weapon, with the threat of using nuclear weapon, because on the Sunday we heard from one of the Israel officials that there is an option to use nuclear weapon on Hamas units, and of course this government minister was revoked and all that information was cancelled by the Prime Minister of Israel, yet it reached the world out. Which means this threat is on the table. That's the one thing, so less chances for escalation are pushing the oil prices down. Also, there is forecast that on the first quarter of 2024 the China import of oil will be less than currently levels. So, and it should be even less now in November, but we are not sure. We're still waiting for some China's data to confirm that. So those two main assets are pushing the oil prices down. Also, the market data from Europe, especially Germany, is showing that we might have a recession in Eurozone. We are not sure what Federal Reserve will do about the rates in United States. Of course, at the moment we have a strong thing that they will not raise the rates on a December meeting. Over 90% of analytics thinks that there will be no rise. Less than 10% think that there will be a rise on a meeting that is planned for 13th December. So all that is pushing the oil prices down. Of course, OPEC is optimistic, but yet I'm not so sure they should be. And we didn't have the data about the currently stock levels of crude oil, gasoline, diesel, and everything else in United States due to some upgrades to IT in Department of Energy, to Energy Information Agency, and it will be published next week, next Wednesday. So there is a data we don't see. At the moment we are on a strong support on this market, $80. It is a strong support, as you can see in the previous times. After dropping from $89 we had this movement. So I'm not expecting to be a V type of reverse, unless of course there will be some escalation in the Middle East and some, for example, Iran will participate more in that conflict. If not, I don't expect anything like this. So more likely we're gonna drop to another $3 to $77. So this is more likely, yet it's possible there will be V reverse, V type of reverse like we had here in February. So only in case that there will be more escalation in the Middle East. And natural gas prices are also dropping down, mostly because of the weather in United States, and the current levels are saying that we have average production of gas in November on record level 107 billion cubic feet daily, and at the moment the demand including export for this week is 100.6. It's also less than it was forecasted on Friday. Next week those demand should reach 108.8, and it's also a bit less than Friday forecast, yet it's above production levels. We also had some problems on Freeport LNG terminals on the weekend, and it didn't affect the market at all because it was only a few hours delays. Yet the export via American terminals is 13.8 BCFD. It's 0.73% more than in October. Mexico export is also dropping another 17% since October. Average in November is 5.4, and it's really surprising because I was expecting that the whole winter will be 7.0. So this is the thing, we should be aware that Mexico export is start to be a major game changer for the local NatGas market in United States. So if the weather will be better, we should rise this price more and more. At the moment we are still on a rising market. As you can see, since August we still on a rising market. higher tops, higher bottoms, higher highs, higher lows. So it's all here. So unless we go under SMI 55, which is at the moment 295, there will be no chance to say we are changing the trend. So the trend line is rising, so we should be seeing in about 2 weeks maybe 3.8, 4.0, especially if there will be some winter hit in United States. And at the moment, for the next idea, we'll take a look on the coffee market, which is keep rising, and we should update this Fibonacci levels. Especially it's not very validate because it's today's candle, so it's still under development, so this high is not permanent yet. For the coffee market, there is a problem with physical export from Brazil because there is so much goods, so much soybeans, so much corn, so much coffee, so much sugar, that there is not enough capacity for the export, and it's about waiting over 40 days for loading in Brazil at the moment for any goods like this. So of course it affects ICE stockpiles, which is less than last year, and it's really surprising because what I can say about those stockpiles in ICE markets, they were very low, and going even lower, it's making a huge market problem. So I'm not quite sure how the market will react. Yet also speculants at the end of October change their position to longs, and honestly we are on the stocks levels lowest for the past over 20 years, and it's probably highly probably that it will even go lower on the next couple weeks. So with this market, I think we can expect to reach 180, 181, which is here between those two levels. I will reduce this one because I think this uptrend is still building, and we should have some kind of exit somewhere here. I'm not sure if it will be on that day exactly, yet I think you get an idea what I'm trying to tell you at the moment. So this is the thing I wish to say. It will be the reaching point, and we should expect that in the next couple of sessions, 6-8 sessions, something like that. And I will take also look on a wheat market. I'm not gonna focus on it only because there is a situation that today we've got USDA reports about crop production and world markets and trade, and I think last report shows us 9.5 million tons of wheat deficit. I was forecasting to drop this by around 6 million to minus 6 millions, so 6 million tons of deficit, but because Rosario Grains lowered their forecast wheat harvest for this current season 23-24 for about 0. million tons to 13.5 million tons, I think we might end up on the global deficit on a level of 6.5 million deficit of tons. It should be enough to rise, despite even the fact that India stocks of wheat is 23% above the government requirement levels, and it will be probably selling by the government, because next year they've got election in India, so they try to push the CPI, the inflation rate of food, as low as possible. So they probably will use this overstocks to reduce some inflation, the food inflation in India, by selling those grains. So I'm not expecting to return the India wheat export to the market for this season, for 23-24, maybe for the season 24-25, but for 23-24, due to the elections and unpredictable weather due to El Nino in India, for the wheat rising and harvesting time, which will be on at the end of the first quarter of 2024, I'm not expecting India to return as an wheat exporter. There is at the moment a chance that India will not become an importer of wheat, which was my consideration a couple weeks ago. At the moment, they are not so bad if they will keep some part of this overstocked levels, not sell all of them to the market, but keep some of it as precautions for the next harvest. It will be very good situation for them. Yet we don't know how it's gonna be. And there is one other thing I think we should talk about: the gold, because it's very popular and it's very common, and the gold is retracing, and now it's fighting $1950. And I think we still have a chance to drop for another $15 down, because a lower risk of Middle East escalation. Middle East started here after our question mark the next day. The next candle was Monday after the Hamas attack on Israel, and then we've got those Israel starting attacking Palestine and the Gaza area and all that things, and now the price is reversing, because we are not sure, because the Federal Reserve in the United States is balancing between the dove and hawk way, and so it's not so good. There is also not bad information from the United States employees market, employment market. So those data are worse than expected, but still they are good data, especially if we compare them with the data, with the levels of such information, such data before pandemic, before COVID-19. So for the gold, at the moment there is no good information, unless Federal Reserve will say, okay, we will stop, we'll end our rates rising, and we've got CPI next week, which could a bit firmed that they will not rise the rates anymore at all, not only on December, but anymore at all. So it will be rising chances to drop rates next year, maybe in June, maybe in summer. I'm not sure at the moment. And also the gold will be positively affected if there will be some escalation on the Middle East. I'm not counting on it, as it's against any more decisions to hoping for war to engage more people. Yet for the market of the gold, it will be pushing the gold up like the oil. So without that, I think we have high chances to drop somewhere here 38.2%, which is $1932 per ounce on gold. So it's still another $15 dropping ahead. Thank you very much for your attention. Have a good day, have a successful day on the market, and have a nice weekend that we have ahead of us. Don't forget to subscribe, stay tuned for another. Thank you very much for your attention, and see you next week.